Welcome back to today's morning report on Thursday the 23rd of April with me, Rich Perry, market analyst at Hantech Markets. I'm going to look at dollar yen now, and the sideways moves continue really. Indecisive across the past few weeks, few ups, few downs. I mean, it's becoming quite difficult to really talk about dollar yen because, I mean, just generally speaking, I think dollar yen, I mean, just taking a step back, dollar yen sort of goes through these patches occasionally where it sort of basically does pretty much nothing, and just sort of basically trades sideways, and then suddenly it will go on a massive run, and that seems to have been the case over the past couple of years really. And it just seems as though at the moment, from March into April, it's basically going into this one of these sort of very quiet phases, and where it just moves 100 pips or so in one direction, then retraces all the way back again. We've had 3 positive candles in a row. That's obviously a good thing. We've also broken above the pivot level at 119.40. Again, a good thing. But looking at the momentum indicators again, RSI is still above 40, below 60. Stochastic slightly rising, so you're slightly positive in terms of your outlook still. And looking at the hourly chart here, we see the pivot level at 119.40. That pivot level is a very good pivot level actually, 119.40 again yesterday. I mean, very slight dips below that, sort of by 10 pips, but you'd still say that 119.40 is that pivot level that dollar yen's working off. We've had a move above 120. Big figure, so 120 big figure, I think arguably now means you're probably going to drift back towards the top. I'm not going to say you're going to break through the top, but you're probably going to be sort of drifting towards the top. You've got the momentum indicators on the hourly now becoming more positive in terms of configuration. You've got the MACD line sort of above neutral. You've got the RSI, which is bouncing above 40. And again, in the last sort of few hours, we've sort of bounced off support at 1964, leaving a low there. And certainly, if you broke above that 120 spot 10 area, then that would sort of reopen the highs of the range again. But I still think this is a range-bound chart. I wouldn't say it's anything more than that. I'd say that within the range, if you're going to trade within the range and use any dips as a buying opportunity. That's sort of obviously 119 spot 64 is your immediate support, but ultimately 119.40 is that big pivot level. So I think that's what you really need to be using. And sort of if you're above that pivot level, you're sort of more positive on the bias. If you're below it, you're more negative. But whilst we're still trading in this very tight trading range, I think it makes it all very tricky to really sort of play it on a longer term basis or a medium term basis even. So just a series of short term trades I think is the way to play dollar yen at the moment. Anyway, I wish you good luck in your trading, and I'll speak to you later. Thank you.